I lost $16,000 trading this week. And that's just being straight up honest. Now, I want to be clear. Is $16,000 going to make or break me? No. Maybe I won't drink that nice bottle of wine tonight or have that nice steak dinner. It stings a little. But would I have changed anything? I don't know. Let's run down how I lost 16 G's. First thing, I bought call options on a stock, a high flyer, a ADR, meaning it's based out of the US, ahead of earnings. Now why? Well, to be honest, I've seen call buying in the stock multiple times. It was INFY. It's worked for me in the past, so I liked it. I had a prior good history with it. And when they've bought calls before, the stock has gone up. Now, I knew earnings were coming, and the options were about 45 cents. I had about 100 contracts. I knew if the earnings were good, I would at least double my money, and I knew if the earnings were bad, the options would pretty much go to zero. Stock reported earnings, beat top and bottom, had an analyst upgrade. You would think the stock would be up 10%. The market maker's implied move was somewhere around 8% higher or lower. Well, Wall Street didn't like it, and the stock fell about 5% on earnings, and therefore the calls went from about 40 cents down to about 10 cents. Even a nickel they printed. Now, the next day, the stock rallied about 4%, and the calls went up to about 10, 15 cents, but again, implied volatility is out the options, and again, it's earnings, so I wanted to move higher. Step one, or loss one, I should say. Number two, I bought calls on Plug. Now, I didn't buy these in very large size, and Plug, I'll be honest, the whole EV, electric charging, clean energy, solar, those names have gotten crushed lately. The stock got cut in half just in the past year or so. Well, actually in the past couple months, in 2021 alone. And I knew the chart was horrible. I was looking for a bounce play. They were next week options, so options expiring not this week in April, but the following week. So obviously high risk, high reward. They're going to be very sensitive, and they were out the money calls. Now, Plug has high implied volatility. The stock can move 5-10% a day, no questions asked. The next day, Biden came out saying he's going to charge for charging your EV vehicle and fuel cell Plug, and all the EV stocks and all the stocks in that sector, clean energy, got crushed. I mean, again, I knew going into the trade, the chart was horrible, that the whole EV stocks, I mean, if you look at QS, CCIV, FSR, XL, you name them, I mean, they're all getting crushed. I knew it was high risk, but I thought potentially the stock could short squeeze, bounce, and have a move higher. No, those options I bought around 90 cents are currently around 30 cents. So again, a pretty, big decline. I still had the position open. Can it go higher? Sure, but chances are what it looks like they were doing was buying the options for next week and then selling further dated out the money options to get their net debit down. I am not gonna, do calendars and stuff, so I took a hit. Or maybe the stock goes up and they just took a lot of pain. I don't know yet. Number three, MPC. Now, going back to Plug, I could have closed Plug for a profit, and I want to be clear on that. It popped up about 3% just yesterday morning, and those calls traded up to about 99 cents. So I could have made money, but I wanted to hold them. I wanted more. And that's what happened with MPC too. The stock was up about 4%. I bought calls that expired in April expiration, so this upcoming week. And, the calls were up about around 70, 75 cents. The calls were up around 88 cents. But I wanted more. Energy was up about 5%. And I picked a buddy up from the airport that morning, so I missed, selling them at the open. And I said, well, I have a couple more days. The stock could pop. Overall market, Coinbase IPO'd and almost every stock went lower, including Marathon Petroleum. And then today it was up a little bit, but the calls aren't going to move because time decay, again, expiration is this Friday. So, still holding the calls. Would I have done anything different on that trade? Maybe I would have sold them that early for a small profit, but they bought 18,000 of the 55 calls, and they were still holding around 6,000 of the 54.5 calls, which I'm in. So what did I take through all this, besides a lot of pain and getting sick, as you could tell from my voice? Well, wanting more sometimes isn't good. I could have came out the week pretty much flat, maybe only a couple G's lower. But instead, I wanted to push. I did. I wanted big gains. I've been on a roll. My account's been hitting new highs. I wanted to continue that euphoria, but it didn't happen. The market's not trending. Flow is, to be honest with you, really bad right now. Why is the market not trending? We're at all-time highs. What institution's going to buy a bunch of call options, right? The NASDAQ played catch-up. NASDAQ's at all-time highs. Dow, S&P. It's hard to buy when you have no resistance and you don't know where the next support is. So stocks, when they go sideways, if you're buying call options, implied volatility goes out the options. And remember, when you buy call options, you need a quick, aggressive move to the upside. We haven't seen that lately. We just haven't. Also, too, if you look at the VIX is just getting crushed. Therefore, volatility in options is getting crushed. And when you're buying short-dated options that are out the money, they are just going to drain out. Now, on a positive note, one of my bull put credit spread services, 2Click Profits, where we sell bull put credit spreads, we sell premium, those trades have been like 5 for 5 or 6 for 6 recently. So I was looking back and go, why is that doing so well? Well, stocks really aren't moving, right? So selling premium has been the strategy instead of trying to buy premium, which I did this week, and that's how I lost $16,000 trading. So, always remember, there is some risk in trading. Don't risk more than you can afford to lose. I'm at a fortunate spot for $16,000. It's going to leave a little bit of a sore throat and my voice gone, but I'll be back on the trading desk tomorrow.